of people here. Sometimes they're even better. I'm going to go over a couple of slides here and some background and history that you might not know. Probably try to go through that part of it very quickly, and then we're going to get to some examples. So please type all your questions right into the chat so that Jay-Z can read them out at a later, a little bit later. And of course, this is not financial advice. It's purely educational purpose. I guarantee you're gonna learn something today because, well, I'm old school. I'm a boomer, and I've been doing this a long time. And I guarantee no one teaches Fibonacci like I do. So you're in for a treat. Hopefully you'll enjoy this. So Leonardo Fibonacci was an Italian mathematician from Pisa. It's considered to be the most talented from the Middle Ages. However, long before Fibonacci was calculating rabbit populations, Indian mathematician Pingala was using these numbers to analyze the patterns of Sanskrit poetry over the last 2,000 years ago. So Fibonacci wrote Liber Abaci, its Latin book of the abacus, over 800 years ago, using the Hindu-Arabic base 10 system. Prevalence of Fibonacci numbers in so many areas of human existence suggests that they probably reflect underlying patterns in human behavior and decision making. They act as a mirror for the collective human psychology consciousness. For example, a molecule of DNA measures roughly 34 by 21 angstroms, which are consecutive Fibonacci numbers. When you divide those numbers, you get approximately 1618, the golden ratio. And we'll talk about that. But here's the thing. The Fibonacci sequence is literally found in the structure of human DNA and possibly everything in the whole entire universe. So I think it's important to pay attention to it. And it's worked fairly well. More than fairly well. So the golden ratio is special because it perfectly balances addition and multiplication and is regarded as the perfect proportion. Welcome if you're just coming in. I'm going to go through from a few more slides fairly quickly, just on the background and history, and then we're going to get into some questions and hopefully some answers that are helpful. So let's get into this. Let's look for ways to identify high probability turning points in price action. Professional traders look for confluence where Fibonacci levels align with other technical indicators. Think of Fibonacci like a thin floor of a building. It might hold, but it's much stronger if you add a support beam like a moving average or a concrete foundation like a demand zone. When multiple indicators align at one price point, this highlights an area where price tends to stop in reverse direction. Okay. So basically now we're getting into the charts, real applications, practical applications of Fibonacci retracements. And I always like to say there's very few lagging indicators on the chart, maybe 2 or 3, 4 if you stretch it. First two being volume and price, obviously. They're non-lagging, they're real time. The other is a measurement like this, like Fibonacci. So what we're doing here is we're snapping a Fibonacci retracement tool on the last clean swing, high to low, and watching how price usually retraces to the 618. So I'm putting my cursor at the 618. Hopefully everybody can see that.
I don't think the cursor is visible.
Okay.
Maybe, are you sharing entire screen or are you sharing just the application?
Am I sharing just the application or what?
Are you sharing the entire screen or just the application? So if you hit share screen, right, it'll have application and it'll have entire screen. If you share your entire screen, then you can see the cursor as well.
Okay, it's not important.
Okay.
Everyone see the 618 on the retracement. I don't want to mess with it now that we're rolling. Okay, another example. You snap a Fibonacci retracement from the last swing high to the low again, and watch as price now uses the 618 as support and eventually reaches the 618 extension. Bear in mind the context. Whenever you're looking at a chart, this was a pullback in an uptrend. So you're automatically looking for pullbacks in an uptrend. And what this is telling you is that it's not going below the 618. After the pullback, we're not going below the 618. In fact, it pulls back to the 618 area and then hits the 1618 in the next number of candles. So this happens a lot, and this is what I primarily focus on, is a structure like this. Okay, in this slide, look how many times price respects the levels, eventually reaching the 1618 and retracing all the way back to 0. So this is a whole day, this is a whole session of the S&P last year, and we snapped a fib right at the beginning of the chart. I don't know if you can see the dotted line on the left-hand side. It's basically the opening range, and if you keep that opening range on all day, you can see where price definitely reacts to the previous levels. So right away, you can see highly visible is the 100. Now, that's not a Fibonacci number, but it's widely used. It's 100% retracement. It's widely used and widely recognized by many professional traders. Same thing with the 50%. It's not a Fibonacci number, but it's widely used. And a lot of these traders even use that as a line in the sand, whether the market's going to be bullish or bearish. 50% retracement. I want to talk more about these retracements, the Fibonacci retracements that are they're actually square roots of Fibonacci numbers. That's what's widely used. You'll also notice that I use some different Fibonacci levels. I'm not going to get into that. It's a little bit more advanced. The ones you really want to watch are the 618, the 1618. And let me go to the next chart and we'll talk about that. So on this chart, there's two previous swings that were used to overlap FIBS, uncovering possible trading blocks. So right in the center of this chart, you're going to see there's two golden lines where the two 50% retracements are. And then if you look, the price reacted to that. There's no question. I mean, it did overshoot it. That's the thing. These are all levels. These are all zones. They're not exact levels. But if you learned where the levels are and how price is reacting to those levels, you can identify these high probability turning points. And right in the middle of this chart, you can see there's a trading block that was really uncovered by Fibonacci's overlaying two swings. Okay, another highly profitable and common structure. It's a little bit more messy, so I wanted to use some trend lines in here to show exactly what's going on. Obviously, the top context is higher, so all you're doing is really snapping a Fibonacci retracement tool on the left-hand side of the chart and watching price action during the course of the day respect any of these levels. Notice how price, going from the left to the chart right now, price really settles in around the 50% retracement. So this is an area where it's sort of indecision, or we're not really sure whether we're bullish or bearish. I mean, overall, the sentiment is definitely bullish and it is going higher. But at that point, we really don't know if the market wants to go higher from here or lower from here. And it's pretty evident that it can't really break below after that final test of the initial move. It really will not break below uh, the 21.4 Fibonacci. And then as it climbs up, it starts to respect and pull back to these other areas like the 50, and then on up, and finally reaches the 1618. How we doing? All right?
Good so far. Everybody okay? Any questions so far? Everybody following through? It's
This is great.
awesome.
All right, awesome. So I'll keep talking, and then if people want to actually ask a few questions specific to what I'm pointing out here, that would be helpful on the next couple of slides. We're
Um,
almost done here.
Matt just quickly asked, what were the main fib levels to watch? He was asking.
All right, that's a perfect question on this slide right here because it's very, very clear what's happening here. Okay, the context is higher. This is a recent chart of the SPY. It's a 15-minute chart. We have an opening range. We snapped the Fibonacci. It's very clear where we snapped the Fibonacci from the opening high to a low. Okay, it's a clean swing. So you really want to snap a Fibonacci across a clean swing. Now, to your point, what Fibonacci levels are we looking at? Well, that's a good question because right here, when you when you look at price, how it reacted after the pullback, it was basically straight up. Now, there was a small reaction at the 100% retracement of this, a huge pin bar right in, almost dead center. So it's possible that you could take a turning point from that and say there's major resistance here at the all-time high of the day, but it never got below the 786, and that's telling. That's very telling that price could never get below any of these. It couldn't even make the 618 retracement, which is very, very common for after an impulse move. So it couldn't get to that level, and that's extremely telling. It's very, very this is a very bullish chart. So I would say to your point is, you know, the center of the Fibonacci retracement tool in gold is really it's like a temperature gauge. It sort of is telling you how strong the retracement is or how weak this retracement is. Is there no retracement? And in this case, there really wasn't too much of a retracement for it, just went straight up. And then overall reaching the 1618 and just a pure rejection from that level, almost immediate. There was no retest. And that's a hard thing to catch because of that enormous candle at the top of the chart from this 1618. Hard to catch that. But the reaction of the 1618 is clear. So I would say the 618, the golden ratio, the 618 and the 1618 are really, really important. It's a temperature gauge telling you how bullish or how bearish a market is actually behaving in the price action. I don't know if that helps you. I can get into more advanced Fibonacci analysis, but that's the most basic structure. Most basic structure are some of the markets that there was a point A and a point B, and then it retraced to the 618 or that area, and then it continued. And that's usually that we don't see that in this chart, but that's usually what happens. We build a base at the 618 and then we go higher. We build a supply at the 618 and we go lower. We go to the next chart, maybe that'll be helpful. Okay, this was Friday. We have an opening range and extremely bullish. I mean, these markets are so extremely bullish these days. They're hard to catch. I'm sure everyone's a little bit frustrated. You have to basically close your eyes and hit the buy button. But This is a good example of what happens on a bullish Friday. Okay. Price tries so hard to smash everybody out at the open and just doesn't really go anywhere. It opened, it dropped a little bit. There's huge candles right in that area. And then bam, up we go. Where did we go? Well, if you notice that this is actually the first pullback of the day, you're going to snap a Fibonacci from the day's low to the day's high, and that's what we did right here. Where did it actually stop? It stopped at the 50% retracement. So that's a fairly decent retracement. So it's going to be pretty. The bullishness is going to continue if we can't get below the 50. And it was hard to get in because we immediately launched right into the all-time high, and then based at the all-time high, sort of bounced off the 50. This is a simple 50 moving average, the magenta line. So that was sort of where it stopped. It really didn't pull back to anywhere. In fact, it launched off of that and immediately went to the 1618. So
Cheese has a quick question. I think when it comes over to here, he said when you say snap days low and days high, are you meaning yesterday's numbers?
yeah, it's a great question. Thank you for that. Um, what I'm going to say is yes. I'm going to say yes. You should snap Fibonacci's on any clean swing in the past, because what happens is you start to realize that the future movements are respecting the snap that you made, and once you see price start respecting the snap that you made, then you know you have an edge. You know that the Fibonacci that you snapped is correct, and other traders are looking at that, sort of a self-fulfilling prophecy. Um, so any clean swing on any time frame, any chart, any asset, anywhere, I don't care where it is, you can find these high probability turning points. And the key to doing that is messing around with it, trying it, and then looking to see whether is your snap correct. And you can also overlap the Fibonacci levels, like I showed you in that other slide, creating these possible trading blocks. Because you're going to have more than one or two or three clean swings in the past. A lot of times what you want to look for is yesterday's range. So when today opens, you don't know what the market's going to do. So that's all you have. All you have is yesterday's high and low. Snap from the high and low of yesterday and see where we're respecting those levels at all today. Notice how price reverts to the 100% retracement with the 50 moving line average and creates several bounce opportunities. So if you look forward in this chart, you could see that after it hit the 1618 and you were short there, you had a good opportunity to get short there. You had a slight retest and then another slight retest, and then it dropped. So it dropped from 691 to 689. When it hit 689, that's 100% retracement from the opening range, and that created a base along with the 50 moving average. Does everyone see that?
The
Does every,
50, yeah. So I got a yes, yeah. Um,
okay, so I just want to make sure that everyone sees that this Fibonacci snap actually continues to work throughout the day,
you think
especially.
you think maybe just maybe testing going to the entire screen might help because maybe seeing your cursor might actually help sometimes. I know
Sure.
that. Yeah, just give it a go. If you just hit share screen and maybe hit entire screen, you might be able to see your cursor as well.
Okay, stand by 1 second here. Entire screen.
Yep. On the top right, it'll say entire. On the top most thing, it'll say application. It'll say entire screen.
Screen 2.
Screen
All right,
2 out
let me
of 100.
totally. For some reason, this won't share my entire screen. All right, we can mess with that later.
Yeah, okay. If that doesn't work, it's fine. Just go back to your regular one. I just want to
All
make
right.
sure that people can see the cursor. Sometimes might be a little bit easy. I'm following through what you're saying, but just in case if somebody wasn't.
Okay, tell me what you're seeing.
Right now, I'm seeing your entire screen. It says you might want to close out the Venmo and stuff on top.
I can Venmo all you guys.
Um, and then you can go to the actual presentation now if you make it full screen, because now we can see everything. If you make the presentation full screen now, then we can find everything. We can see everything.
Yeah, it's not doing
Click
that.
the
Let's see.
triple dot, and then enter full
I'm
screen.
trying.
There you
Oh,
go.
there it goes.
Bingo.
Okay, great. You got my
Yeah,
cursor?
we got the cursor. That's awesome. That's
Okay,
perfect.
awesome. Thank you. Sorry about that, guys.
Nope. Yeah, that's awesome. Thank you, Ben.
So this is the error that I'm talking about. So after it hit the 1618, now notice I took out all the other Fibonacci's levels to clean this up, to just show you guys exactly what's, what to look for here. And I would look for this every single freaking day. Okay. So basically the price went up to the 1618, came back down. It bounced on that opening range break, on that opening range that we snapped the Fibonacci. So right here, we're building a base of buyers at the 100% of the previous range of that swing that we snapped, and the 50 moving average is here too. It's tagging that all the way down. So this is what I'm talking about when multiple indicators align along with the Fibonacci's. It's pretty accurate. It's pretty helpful to identifying high probability turning points. So let's outline the steps real quick here, if you don't mind, and you can type in more questions if you want. There's no such thing as a bad question if you don't know the answer. So you're finding this clean swing on any market, any time frame. You're snapping a Fibonacci tool from high to low or low to high. Doesn't matter. Notice the current price action if it's respecting the levels that you just snapped on the screen. If it's not, then you want to try again. You want to try and see if you can duplicate what the other traders, other Fibonacci traders are doing. I guarantee the algos are using this. The professional traders use this. Use other technical indicators to create areas of confluence. So for instance, I like using the 50 and the 200 moving average. I like using trend lines, and I like using supply and demand. These are all, except for the moving averages, these are all non-lagging indicators. And I stress that is so important because by the time your indicator, the 50 moving average or the 200 moving average, does something on your screen, it's too late, usually. But you can use it in conjunction with other technical analysis practices. So you're basically studying how price reacts to your Fibonacci snap in the future. Okay? And then you mark those zones as zones of interest. And you use your trade plan to enter and exit. Everybody should have a trade plan. Okay, so now I can really get into exactly what it means. What using the Fibonacci on a price chart actually means, and the things that you should look for. So obviously the most important thing is context. It's everything that's happening off the chart. It's Taco Trump, threatening to pause his tariffs again, or threatening tariffs again. That's his playbook. That's what he's doing. He's a negotiator. He's like one of the number one negotiators ever. So if you know what the context you're going into, if the market's very bullish, then you are going to look for bullish setups, and that's going to give you the trend. You have to go with the trend. Obviously, I'm sure you heard that a million times, but you got to know what the trend is. A lot of times, to identify the trend, professionals say it's a series of higher highs and a series of higher lows. That's an uptrend. series of lower highs, a series of lower lows. That's a downtrend. You also have to locate it on a chart. So if you're looking at a chart right now and price comes in on the left and exits on the right, upper right corner, comes in lower left, exit upper right, then you know this is a bullish trend. Don't fight that. It's dumb. And then you're looking for confluence. You're looking to snap a Fibonacci retracement tool on a clean swing, somewhere you could really identify on this chart one big impulse move, where from low to high or high to low. It doesn't matter which way you're snapping this Fibonacci tool. I'll explain that to people that want to know why that's true. You can snap it either way. It's reciprocal. It's math. It's just in the math. Now, I'm going to keep going. If people don't have any questions, is everybody up to date? Is anybody like not understand what I'm talking about or needs a little bit more clarity before I get into to entry stops and targets and shit like that?
I don't see any questions. If anybody does, please go ahead and type it. I will relay it. Cheese says is good. Keep going. I guess everybody's on board with that. So
All right. All right, cool. All right, I'll just keep talking. I could talk forever about this, so you're gonna have to probably kick me out of here. On your entries, basically what you're looking for is this high probability turning point, and you're going to identify these in the beginning of the day. Now, of course, you have to adjust your Fibonacci retracement tool during the course of the day, like the opening range. I guarantee the opening range is going to provide you with some opportunities where price is going to reverse. It may not be a full reversal, but it's going to be a decent enough bounce for you to take advantage of it if you're ready. I'm only laughing because I'm never ready. I'm never prepared for what's happening. It's so funny. Sometimes I am. So confluence entries. So you're going to use confirmation on a pullback, on a continuation. When price comes in here, let me see if I can pick up. Oh, the pen. Yeah, here. Okay, cool. So let's say you've got a market and it's this is the opening range. Sorry, it looks like a retarded market. But okay, so that's why we snapped this Fibonacci retracement tool on this market, because you had a market like this. Let me redo this. Holy shit, it looks like erase all. All right, so let's go. Let's go like this. Okay. So you've snapped the Fibonacci tool and it looks something like this. Okay. Let me erase this again here. Let me just go like this. Okay. That's something like this. So price came in on the upper left. Well, where do you think price is going to exit? Well, it depends on the broader picture, right? The bigger time frame. But let's just say, for argument's sake, this is a bearish market from higher time frames. So this is probably going to go up to here. Now, what I really wanted to impress upon you is that Fibonacci is like a temperature gauge. I don't know how to explain it, but it tells you how strong the bounce is going to be. So um, anyone, if this thing is in a bear trend, it's dropping and it retraces to 382, what could we say about this market? That's all you get is a 382 retracement. What would you say about it? Do you think this is a strong retrace or a weak retrace?
I'm gonna say it's weak.
Very weak. Boomer. Brad, you're going to get it one day. Okay, so this is a temperature gauge, so that if this is all we get, that's a very weak retrace. So that's very telling. Now, what if it goes up like this? Okay, now what are you thinking? Well, we're hitting the 50% retracement, which is very common Okay, it's very common for a market to have a move like this and then retrace to the 50 or even the 618. These are the numbers that you're really going to want to pay attention to. And you notice how my line is getting a little bit flatter. We're losing weakness. So again, the entry, what I want to see here is I want to see a candle that blows out the 618. Let's say you have a moving average here. Say you have the 50 moving average coming down here. That's more confirmation. Okay, that would be, I'd be all over this trade right here. So let's say the first candle right here, it kind of blows it out. You're not entering yet. Not entering yet. Let's say the second candle goes like this. Now what are you going to do? Okay, it's definitely pausing here, and if we're in a bearish market, I guarantee there's going to be some selling going on here from a whole bunch of people. So what you want to see here is something like this, where it hangs around this level. It may blow out the high again. This is the retrace candle right here. So it blows out the high, takes out that high just a little bit to sweep those stops, and then boom, where's the next candle? Right here. Okay. This is a very common scenario. Every single freaking day this happens. Same situation. A lot what we're seeing now is, price comes in from the left-hand side of the chart. It's bullish as fuck. Oh, excuse me. I didn't mean to say that. Right?
That's okay. You get one F bomb.
Oh, you get one? All right.
Yeah.
I'll try not to do that again. So you got a market that's doing this. So you snap a Fibonacci line there, and okay, so now what are we going to do? Now what are we watching for? Well, I really want to see something come down here. I want to see it retrace. So is this a strong retrace? Or is this a weak? Oh, incidentally, supply and demand. Okay, this is a supply and demand zone, if you will. It's a small one, but it's there. And what if you have a moving average? Let's say the 200 moving average is coming up like this. Now what are you going to do? Well, the pros like to do this. They like to smash out the previous low. They also know there's lots of eyes on this 200 moving average. I know a lot of guys are looking at this. What do you think they like to do? Blow it out, right? It doesn't get below the 382 here. What do we think? Maybe it touches it. Maybe it tags it. Drops us up a little bit. Goes through it a little bit. Pops right back up. What do you think the next candle looks like? Okay, on up to the 618. That is the golden ratio. If it hangs around in this area, especially if it stops and turns at the 618 very, very quickly is what we're seeing. That is a very bullish move. Okay. And there's enough momentum to get up to the 618 for sure. And that happens every freaking day.
They got your ass with that trip.
Yeah, right. You got that? I mean, that totally makes sense. And that's
Yeah.
why I color coded them this way. Now, there's markets where they're very, very volatile. So you have a market where, it's like Tesla. Tesla's coming in like this, it's blowing out the low. It comes in like this. And then it comes back up here. It may stop at the 886. So this is extreme. This is an extreme retracement. Okay. And this is where your risk to reward ratio is very good. Why? Why is it good? Because where are you putting your stop?
Up
Well,
there. Yep.
most likely you're going to put your stop above the 100 retracement. Okay. And if it doesn't go there, and if it doesn't touch that, the tendency would be to go straight back down to where we were and make new lower lows. So that's why I call the 786, the 886, the extreme retracement, because we got a lot of volatility going on, but we're still keeping in the trend, the overall trend. But we have high risk to reward, high risk to reward ratio here because you have a small stop and a very, very large target possibility.
Cheese ass. So you're watching for a churn in the area, then expect a breakaway move.
I would say you're not going to enter as it goes into the. What if you enter at, oh, this is not going above the 618. This is a downtrend. This is a pullback. Okay, yeah, this is it. You're not entering here. You're not even entering here. Are you entering here? I like to see a blowout. Entering here? Are we entering here? I'm entering here. Now I'll enter here. Now I'll take the retest. I'll take the retest here. I want confirmation that this is the top. I want to see a blow off top. Market makers always they're doing a sweep. They're doing the sweep.
Cheese asks, these here are in minutes, right?
Say minute chart. Yeah, maybe 5 minute chart.
5 minute chart. Okay.
I would say 5 minute chart. I don't really trade off a 1 minute chart. That's insane. But you guys are much younger than I am. I'm probably double your age. I've been trading for 40 years.
Yeah, you got a lot of knowledge.
I've seen a lot of shit. I don't know about knowledge, but I've seen a lot of shit. I know what these markets do. I was a broker. I was a broker on Wall Street for 25 years in the FX market. I used to rule the yen market, the spot yen, the dollar yen market on the foreign exchange side. I could tell you some stories. And I will tell you this: that the movie, The Wolf of Wall Street, that's not even half of it of what went on the floor. Just to
uh,
give you a clue, that
he's,
is
yeah.
the closest depiction of Wall Street that I could have ever asked for, and it was worse than that.
Jesus. She's asking, so these positions are 5 minute blips. So what you just did was what, 25 minutes of time? He's asking. So like what he like the little dots. I think he's saying the little dots at 5 minutes is what he's, I think, trying to get at, if I'm not mistaken.
Yeah, it depends on what chart you're trading off of, but yeah, in my world it would be the 5 minute. I'd be looking at a 5 minute chart right now. I would take higher time frames, and I would look at the daily, the 60, the 15. On on one of my monitors, I have three charts: the 60, the 15, and the 5. And then I have my options trading app. So I'm looking at the 60 for the higher time frame swings, and I've got Fibonacci's on the higher time frames. And then I have the 15, which is the medium time frame. If you ever read the book by Alexander Elder, Come Into My Trading Room, or Trading for a Living, uses the triple screen method. But anyway, that's another story. So this is basically any time frame you want confirmation. I would be visualizing using a 5 minute and then entering on a 1 minute just for the options for my option screen. So I have an option screen that's a 1 minute, because I want to see a volume breakout on the 1 minute candle as well. That's part of my trading strategy, is that there's a 200% volume breakout in the last 20 candles. So I want to see the move. I want to identify the area. I want to identify the zone. I want to set up the trade. I want to get the retest. Watch the retest, and then I want to see volume in the direction of my trade. I don't want to get too much. I don't want to talk too much about risk management, because that's a different presentation. Right now, really, I want to focus on teaching you guys to identify high probability turning points where you may be trading with the market makers and the professionals. So I'm going to keep going. If there's no other questions on this, I can keep going. I don't know how much more time I have. I know, JC, you got a tight schedule probably.
No, I got till 2:30 is when I start marinating stuff, so you got plenty of time.
All right, so when you guys get bored, just let me know. Um, okay, so we talked about strength and weakness of the market according to this temperature gauge. So the opposite is also true. If you are coming in here from the left-hand side and we are, really freaking volatile, and you see something like this, where
Make
it's
sure I don't put your
like,
face on the video.
just dropping all of a sudden, it's the reciprocal. So the 11.4, okay, the 11.4 here is the same as the 886. Okay. 11.4 plus 886 is 100. 886 plus 11.4 is 100. So these are exactly the same levels on the opposite side of the 50 retracement. So a lot of guys use this as, well, if price is above the 50, then it's bullish. If it's below the 50, it's bearish. Well, sometimes that's true. But anyway, getting back to what I was originally saying, you might see a market like this that is bullish, and all of a sudden you have this huge move down into this 214 and 814, and these are the same these are opposite from the 786 and this 886. So your risk to reward ratio is very good here, because you have a very good place to put your stop, and you have the possibility of that market might go right back up into this 1618 here. That's a little messy. I don't know if I confuse you guys with that. Okay, let's keep going though. So the golden ratio, that's the most important structure that you're going to see on a chart, something that looks like this. Sweep. Okay, let's talk about that. Everybody's cool on the golden ratio. The golden ratio consists of its exact positive number reciprocal. When you subtract one, it's positive. It's the only positive number that it's exact reciprocal. I don't know if there's probably some math geeks out there that understand this more better than I do. But basically, this is the golden ratio, and that's what you want to look for. And the reverse is also true. So price is going to pull back to this area, and then it's going to reverse or continue, is my point. This is the area. This is the money area. This is where price is really going to tell you what's going to happen in the future. All right. So when we're talking about sweeps, so the pros love to sweep previous all-time highs and lows. Where do they sweep to? The 113. I can't tell you how many times a day I see this. You have a market that's farting around all morning. It's doing this, it's doing that, it's going like this, and all of a sudden it retraces just above the previous high to the 113, almost, or even more. Maybe you see a candle like this, where it just clips it, and then bam, straight down. I can't tell you how many times I see this per day. So keep a good eye on that. This is another thing you want to watch. You want to really pay attention to the 113. And if you've drawn your Fibonacci retracement tool correctly, you will catch these. So I would watch out for these. Okay. I would watch out for this. And obviously this. They're all important, but you just got to know how to use it. This is the basic stuff. So again, here, these are the extremes scenarios where the reward to risk to reward ratio is pretty good. Same thing here, and you can invert this scale as well. You can the tool works both ways. So if I were to invert this tool, you'd have the 113 down here, and so on and so forth. So it works both ways.
Cheese is asking, so the 113 is an engineered price point by a market maker, basically bait.
Yes, you could describe it like that. A lot of the market makers use the Fibonacci's. A lot of algos use the Fibonacci's, and a lot of professional traders use the Fibonacci's. So they know that a lot of people are watching this, which is the reason why you can't say the it's exact. It's a zone. So you'll get candles like this. Okay. So you had a bunch of stuff here, sort of all of a sudden, and then it popped above and went up here. You always see a blow off top, when just before, because they want to tee up all the buyers. They want to tee up buyers so that they can sell more. So what they do is they take the market up past where it's supposed to go. This is a technical sweep. This is the oldest trick, the second oldest trick in the book. Okay, so you oftentimes see this, and the reason why they do this is because price moves faster further with less people on board. So when you have a bunch of retail traders who are short right at yesterday's high, let's say they're short right here, the market makers bring price up, they see how many stop losses there's probably hundreds of stop losses here, and they take it up just beyond the stop losses because that helps them they build their short position. Every time they hit a stop loss, they get short. They're triggering all these stop losses, and then what do? They drive the price back down. And where are all these guys that got stopped out are now chasing price. All these guys are chasing price. So now they have to sell here, and that adds to the momentum. So price will travel further faster with less people on board. You'll get people puking down here, and they'll rip it up the other way. This is the face rip. Okay.
It's a great question, by the way, Cheese.
Yeah, that was a very good question. That spurred
Yeah.
a very interesting answer, I hope.
He also says this is called a bucket shop drop back in the day, right?
Yeah, so they would hide their orders. They would flash orders, and then they'd go to an obscure broker, and they'd give their buddy at this obscure broker a huge order. If the order came in the market, let's say a huge corporate. I used to have this client. The bank was called Fibro Solomon, and there was a trader there who was a world famous. And what the hell was his name? His name was like Eddie Schwartz or something. And uh, this guy took on the central banks. He was one of those George Soros types, and he was my client. And he used to come in on a daily basis, and we'd be trading, a dollar yen would probably be like, 145, 1020. That would be the market, the bid ask spread, 1020. So 145 was the big figure, and then 1020 was the bid ask spread. And we'd be shouting, and this was back in the day when we used to shout prices over a speaker box. So we'd have direct lines to all the banks in the world. And we'd have a broadcast microphone. So you press a button and you would say 1020. And that price would go out to all the banks in the world. And all the banks knew that dollar yen was trading between 10 and 20. So every once in a while, this crazy guy from Fibro Solomon would come in and say, dollar yen is now 144, 1020. And it would just chaos would ensue. It would be crazy. And I'd be like, okay, you're going to sell like $100 million here. And he's like, keep going. I was like, what? We had orders. We had orders on the board we would get orders from banks all over the world. We had this dry erase board behind us, and all these banks were putting in all their orders. And we'd have orders all the way down. So we'd be filling all these orders, and meanwhile, all the brokers on the desk were trying to yell prices, but it was complete mayhem because this one guy was selling $100 million 100 points below the current market, the street market. It was freaking nuts, guys. I can't even. I can't even describe how nuts it was. Anyway, that's why we drank and smoked and did a lot of blow. Uh, what else can I tell you? So just to recap Fibonacci sequence, it's everywhere in nature. It's human psychology. You can't get away from it even if you tried. Even if people understand what's going on, it's still going to happen. I hope this was helpful. Any further questions or deeper questions, or you want to go deeper into this, I'm fully available for anybody that wants to look at this and understand this better. It's incredible, actually, how amazing this stuff is. When you combine this with other technical indicators, you can really do very very well with this. And
Laguna is asking, do you have any other fib instructional videos or readings to recommend?
no, this is, as I said in the beginning, no one teaches Fibonacci's like I do. This is probably this is unique. I mean, I think a lot of guys have different interpretations of what Fibonacci's mean, and I learned from a lot of different people for a lot of years. Back in the day when we used to make point and figure charts, we didn't have computers like this. We weren't able to print out charts and do shit like this. We used to mark price points on graph paper with pencil and eraser. That's how I started, and we used to use Fibonacci's back then. So I have a very very deep sort of weird relationship with Fibonacci's, because it's been so long, and I just see it. It's like once you see it, you can't unsee it. Um, I'm sure there's books out there. I don't know how up to date they are. They use different numbers. I like these numbers. These are widely accepted numbers. These are actually square roots of Fibonacci numbers, but they obviously work really really well. Um, I would say you really got to get the tool out and start snapping on a chart, on a clean chart, and really look
Cheese,
at it.
on that note, Cheese is asking, what tool do you use to draw fibs?
So most platforms will come with a stock indicator, um, and you can. Oh, I don't know what the hell that is. And you can. Let me go back to slide 15. I think it was slide 16. Let's see. Um, I would say that you really want to keep it simple if you can. This can get very, very complicated very quickly. Uh, I would take the stock indicator and modify it. I would modify the indicator. A lot of times they're not gonna have the extensions that I have. Um, these extensions, the 141 and the 127, are uncommon. I would, and also there's more square roots in here. I think there's a 70.6 and there's a 30 in here, which I find to be not as helpful as these other numbers. So I just took them out. These are the best numbers that I think that anyone could use. And I would set it up with the color coding this way because it's really a temperature gauge on how weak or how strong your retracement is. That's a very big helpful thing. And also you want to notice like how price can hover. I said this before, but how price really hovers around in this area a lot. So you can sometimes take breakouts on in this from this area because it's really deciding on where it's going to go. Are we continue? Is it a continuation bearish, or is it a continuation bullish? It will kind of hang around in this area, and then all of a sudden, bam, pop! It'll use it to go higher. Um, Again, I'm in trading chat. I'm in that trading chat room. If you have any questions at all about anything, if you're struggling on how to snap this tool and use it in the future, throw a chart in there and I will mark it up. It helps me practice the tool, and it helps me learn stuff that I didn't know. So if anybody has any questions or they want to talk about this more or deeper, or practical application is really probably the best. If you guys have a chart, let's say you have a position in Apple or Amazon or something like that, and you're trying to figure out, at what point do I give up on this? At what point do I get in on this? Um, Throw me a chart and I can help you figure that out based on the Fibonacci's. It's just another tool in the arsenal. You need several, but I think it's an important one. Obviously, I'm 100% believe in it.
Matt has a question. Go ahead,
Good.
Matt.
Can you hear me?
Yeah.
Yes.
Okay. Is there certain sectors that it works better for? Like you mentioned gold. Would any commodity work or?
It's an excellent question. Some markets work better than others, for sure. I would say if perfect example is Amazon. It doesn't really move that much. It moves pretty slowly. You want to compare a chart to Tesla? Tesla is one of the highest traded stocks in the world, in history. It respects Fibonacci levels 100%. So I would say your question is excellent because it brings up a new point. And this new point is, the more a market is traded, like the SPY or QQQ or silver, for instance, commodities for sure. Now, silver and gold are going to be difficult to throw a Fibonacci on. Why? Why is that right now? Why do you think that is?
A ridiculous amount of volume. It was like 4.3 billion like options volume yesterday just on SLV.
And what's the chart doing?
It's dropping. Well, it is.
We
I
have a
think it is
parabolic.
respecting. It's going parabolic, but
We have a
it looks like it's
parabolic move, and now we have a pullback, right?
right.
Okay. So the question is, where are you going to take the Fibonacci swing? How would you draw a Fibonacci on SLV right now? Maybe I can bring in Can I bring in a chart?
Should be able to.
No.
You just gotta change your screen. Like put that on
Okay.
full screen, and you can pop up a screen, pop up a new tab and chart if you want to do that.
Let me try that. Exit full screen.
So you can open up, yeah. So now
All
you
right. So
can.
we're looking at PBR, right?
Mm-hmm.
So where the hell am I going to draw this Fibonacci on this screen? Let's hold on. Let's make it a little easier. Let's go to a weekly chart. Or do you want to do a SLV?
Yeah, I think SLV.
Let's look at SLV. Okay. So let's look at SLV on a weekly chart. Where the hell are you going to draw?
Man, them that no having no dark mode is killing me. Sorry, brother. I'm kidding. I'm messing with you. I'm just messing with you.
Um, where the hell are we going to draw the Fibonacci on this chart? I mean, really? Where would you draw it? All right, let's go down. Let's go down to a 1 hour. Okay, here we go.
It's like 90. Well, damn.
let's go down to a 5 minute. This is great. This is great, okay? So on a 5 minute chart, I'm trying to get more real estate here. Oh, Jackson, my dog's growling. Okay, so this is a perfect example, like where do I draw this Fibonacci number, right? This Fibonacci tool, right? Where should I draw this? Where could I draw it? That's what you should ask
97?
yourself, huh?
Like 97, about 97.
Yeah, so we have a really nice swing from here to here. Is that what you're saying?
Yeah.
Okay, good. So you're on to it. Okay, so see what I did there? Can you see this, by the way?
Yep. Wait.
Okay, so this is cool. So notice I took it from here to here. So the extensions are up here. What happens if I invert this? What happens if I come from here to here? So this is a clean swing, but there's really no retracement here, guys. Right? It's a shame I can't get my TradeStation chart on here because this is terrible to work with. Let's see here. What can I do?
What is TradeStation? Is that like an app?
Yeah, that's my trading.
I think you can just drag the app into the screen from whatever screen you have it on.
Okay, let me see here.
There you go.
Okay.
This is some FBI application over here.
Okay, this is much better, guys. Thank you. Sorry about that delay in. Okay, so now we're going to actually see here. Much better. Okay, this is a great. This is a great example of what we were just talking about. Okay, we finally found somewhat of a pullback here that we're able to draw Fibonacci on. It's important for you guys to see that if you have no pullback, there's really nowhere to put the Fibonacci yet. You need a pullback. So keep going down in your time frame to find somewhat of a pullback. So we have something of a bull market here, if you will. And we find that if we snap it from high to low on this clean swing, what happens to the low here? Uh-oh, 113. Bam, there it is. I was talking about that earlier. There's the 113. The pros love to do this. What they're doing is they're taking all the retail they're taking all our retail traders to the cleaners here, okay? So they know that this is a bounce. The retail traders come in here, they call them frontiersmen or something. So they think the bounce is here and they're loading up. Okay, and what does the market maker do? It blows out the low and a stop sweep. Okay, where do they blow the stop sweep to? The 113. And this happens to be the 50 moving average, or is this the 200? This might be the 200 moving average. Yeah. Okay. So there you go. That's all I can tell you on this with this type of a market and this chart at this point is that Fibonacci is definitely in play with this market, and it works on any asset, especially commodities that are heavily traded. I would say the only pitfall is a market that's not liquid. The more liquidity that you have in a market like Tesla, the more respectful it's going to be of Fibonacci because more people trade it, and there's a hell of a lot of Fibonacci traders out there, I guarantee, and algorithms and trading apps and all kinds of strategies that use Fibonacci numbers. So self-fulfilling prophecy, get on board and use it and try it. So let's just drill down on this one, okay? So we can even now switch this down to this low. So what do we see? Not too much. Oh wait, I can get the absolute low here. Okay, so what did we see here? What did we talk about earlier today in terms of strength and weakness? Well, we have a semi-clean swing down, and after this low, what kind of a retrace do we have? We only got back to the 618. It's a pretty weak retrace. Look at these candles. Look at these two candles right here. Can you guys see this? My eyes are terrible.
Yeah, good. I mean, I can. When everybody else good.
Yeah.
Okay.
Yeah, I can see it. Yeah. The two green candles.
If I could get my ellipse to work. Yeah, these two spikers, spiked candles. Right after it failed to get above the 618.
It does not want to work.
It's fucking stupid. Oh, that's my second one.
That's okay. It's spread out, so you're fine.
I mean, come on, guys. What are we doing here? You barely make it back to the 618. What is that telling? What's that telling us? Look at the weakness here. Look at these two spikes. Would you like to be short here? I would. I would definitely be short there if I saw this real time and I was watching this whole thing, this whole scenario play out. Let's try this a different way. I can keep going, guys. I got all day. Let's do this. Let's take this little bad puppy right here. I'm such a boomer, guys. You can say it. I don't care. I'm a freaking boomer. I was born in 1963. I'm 63 years old. I'm a boomer. I've come to realize that, and I'm okay with it.
You're my dad's age.
Right. I have 3 kids.
Yeah, my mom's age. Yeah.
I have a 24-year-old daughter and a 22-year-old son and a 16-year-old son.
Damn.
My sons are snowboarders. They're like nuts. They want to go snowboarding all the
nice.
time. That's all they do. That's all they want to do. It's like, Dad, take me to Blue Mountain. Come on. Okay. I don't know if you guys can see. I got to assume that you guys are seeing these levels. I mean, they're a little bit. They're
Yeah.
a little bit low. You're seeing them okay? Should I
Yeah, we
make them
can.
bigger?
Yeah.
All right, cool. All right, so yeah, we just took this swing. Actually, on this chart of SLV is this is the opening range. So it's the opening range swing here. Okay, so we just took the high and the low of the opening range. And it doesn't matter the time frame. It's just the first clean swing. That's a very clean swing, wouldn't you say?
Yeah.
Where does it stop? 886. Right here. Stops right there. Okay, so if you had the opening range and you said, okay, this went to the 886, that's a pretty strong retracement, but we have a lot of volatility in SLV right now. It just dropped like, 10% the first time in how many weeks? Right? So we have a little volatility here. Okay, wow, it went to the 886. What's my risk to reward ratio here? I mean, think about it. What's this price? Let's say if you peg this exact and you got short at 99. Let's say you wanted to get short at 99. Okay. There's 99 right there. Let's say on this candle you said, you know what? I'm going to go without confirmation. It just rejected off the 886 almost exact. I'm going to get short here. I think that's a good trade. Look at these two highs. So if your stop was above 100, it never even got close.
Yeah.
So 99, 98, there's your stop. Now I'm not saying you're taking a $1 stop. Now, obviously you've got to size it correctly to your risk tolerance. Remember risk tolerance, guys? How much money are you comfortable losing in one day?
All of it.
Right.
You could lose all of it, and you wouldn't lose sleep.
Yeah.
I was kidding. Not all of it, guys. Don't do that.
I know,
Please.
I know. I'm
Please.
my
No, it's
my
very true though.
my
There's people out
tolerance.
there.
My tolerance is $1,000.
But it's like, yeah.
No, I mean I've talked to friends. I'm like, he's telling me how much he's lost, and he's standing there smiling. He's like, I've lost 90 grand. I've been in other trading rooms, and he's like, yeah, I lost 20,000 today.
Not
I
me.
don't know if you've read Morgan Housel, but he has a really good book on this, and he has a whole chapter on like the psychology of losing money in the market.
Very important
like-
topic.
Yeah.
Yeah.
You've got
Actually, David, I got a question. So that first green candle, right, where it touches the 886, right? Why would you wait for the next one rather than the first one? Right, it almost
you talking-
touches. Yeah, but the one before that.
You're talking about this one.
Yeah. So what is
true.
your difference between that one and the one before that, the one after that?
It's a good eye. It's absolutely true. You could definitely say, okay, they're selling. They're going to sell this. You could definitely say on this candle right here, it's starting to look like this is going to be a turning point. Absolutely no question about it. You could use this candle as a guide. This is the blow off top, and then if it doesn't get if it doesn't get above this blow off top right here in the 886, we're off to the races. I'm short.
Yeah.
You could use this as a guide. This is the candle in control, which is another strategy. So this candle in control, it closed at 98.64. You could say, I'm getting in on the next candle below 98.64. Or maybe you get in on the low of this candle. Oh, the low actually is 98.64. So you might say, okay, well, you know what? I'm going to get in at 98.64, and my stop is going to be at 99.30. Pretty big stop, but the point is taken for sure.
Yeah.
We're definitely seeing a setup here.
Yeah,
I would wait
I guess
this
confirmation is
candle.
important, right, over there, because you're seeing that candle jump up, and then you're waiting for another confirmation on that, right? So confirmation is
No,
key. Yeah.
no question about it. But again, look, bro, then you get this candle. Let's see you didn't get in. Let's say you said, fuck, I should have got in on this one. All right, let's keep watching this. Okay. Nah, indecision. Whoa, I missed it. I totally missed it. I should have been short. I really should have been short. All right, go to the next market. No, keep watching, bro. What happens here? Oh, it stops at the 618 right here and the 50 moving average, okay? Maybe we're building a base. Maybe we're going higher. More selling. New low. Okay, I definitely missed this. Next candle? Bam. What would you do if you saw a green candle hitting 99.10. You had a golden opportunity here if you had the balls. If you
Yeah.
had the balls to say, this is a bullshit move. But you're in a downtrend. Clearly on the 5-minute chart, you're entering from the left and you're exiting on the right. Well, you don't know that yet, but it's definitely a downtrend. You've got a huge impulse move here to the downside and then a retrace, an extreme retrace to 886. What are the odds that you might say, this candle's bullshit? Well, certainly you would say to yourself, that's never going to happen again. Bam! It happens again.
Yeah.
99 again. I mean, come on. And that was the place to get in right there too.
I mean, I think good thing to note over here too is that like it tried to hit the 886 again and it couldn't, right? So that whole little section between 786 and 886, like it struggled heavily to break past that level, right? So
that's why you make the big bucks, because you think in terms of, okay, what is the market thinking? What is it doing? What is it showing us? Your brain is in the zone of, okay, what is this candle actually saying to us? What is this candle saying to us? It couldn't get back to the 886. It tagged it once. Now it's got a rejection at the 886.
yeah.
That means to me, there's traders like you and me out there saying, this fucking move is bullshit. This move is bullshit. You know it is. This candle is garbage. It's going to die. This sucker's going to die. And if that happens again, I'm going to put an order here. I'm going to put an order here at 99 just in case it happens again. What about doing that?
Yeah.
Okay, so now let's move forward on this chart because there's more stuff here, believe it or not. It's amazing when you put a tool to things, how your brain can now react and project and forecast what it's going to do in the future, or these scenarios that are going through your brain, instead of using stuff that's off the chart, your emotions or your the way you're feeling or your bias or anything like that. It's always good to have a barometer on the chart that's telling you in real time what price is actually doing, because then you have an area of association where your brain can say, oh, you know what, it visited there, it's not going above that, so what are we going to do here? Well, it is starting to now respect this 50 moving average that's now trending down. And also, if you'll note, it did come down. These Fibonacci's work both ways. They work on the way up and they work on the way down. So they can become supply. What's used to be supply can become resistance, demand, whatever. So here, and I told you this before, is that the center of the Fibonacci retracement tool is sort of like, are we bullish or are we bearish? Are we going to continue or are we going to reverse? And it's outlined in the price action here. Look at the price action here. It comes down to 382. It bounces off the 382, comes up to the 50, hits the 50, rejects off that. I'd be super bearish if I was short. I'd be like, all right, I'm going to buy these at freaking 95. And then it definitely drops. Then where does it go? It goes to the 200 moving average. It sort of starts basing there. It bases off the 382 and the 200 moving average. It sort of drops again, but this is the sweep. This is the extension. This is the extreme. We're going down to the 214 here. So remember the risk to reward ratio here. All the professional traders and market makers are licking their chops here because they have an easy stop. The easy stop is 95. If it goes below 95 and we make a new low, then we're definitely going lower. So you could lean against that. And that's what these traders did. They leaned against it. They said, this is the extreme. We've had a lot of volatility. It happened up here, rejected off the 886. It didn't exactly reject off it. It's sort of based there. And there's no closes or opens below it. And you have a bunch of wicks. On this candle, what were you thinking? What were you thinking at 125 when this candle was formed?
I want to buy the bottom. That's
Yeah,
what
I would
thinking.
say at this critical juncture in time, I'm sorry, I tried to move that so you couldn't see anything more, but you obviously know what's going to happen. At this critical juncture in time, you might say to yourself, it's It's extended. It's extreme. According to the Fibonacci, there's a hammer.
Oh,
Is there more volume?
no. Oh,
Not too much more.
not too much. But it's the inverse of 78.6.
Yes.
It's the inverse of 78.6. So
Yep.
it is a retracement
You
level
can
that's
see it
extreme.
bounce through almost 3 times on that level too, right? Right above that
Oh my
level. So
God.
It bounced 3 times, and then we get this hammer candle
Yep.
that took out the low.
Yep.
Always look for those. Always, always. This is the footprints of the market makers. This candle right here. Because why? It took out a previous low, and it completely rejected off of
No
that.
confirmation. Yeah.
And let's see, up volume, down volume, almost equal. But this is a good candle to say, this is an area where I really need to pay attention. And bam, it worked. Where did we go to? We went right to the 50. We rejected off the 50 and the 50. 50 moving average, 50% retracement.
Yeah. Also, to
Where did we go?
all Periscope users and Gamma GX users, this pair with Gamma exposure and Periscope is almost unbeatable. By the way, if you can make sure you guys use this with SPX levels, it makes a huge. It's a cheat code. It's a massive cheat code. So,
And this is Periscope.
yeah, Periscope paired with this because it gives you market makers buyer levels and stuff like that. Yeah, dude, it's crazy.
Yeah, I've seen the guys using that, and it looks very interesting. But to continue on here and into real time, after we jumped above the 200 moving average, obviously we had to bounce at the 50 and the 50. It broke through finally. It went up where? To the 618. It's obvious to me, and it should be obvious to all of you, that these Fibonacci's are being used by professional traders. There's no question, there should be no question in your mind at this point of the presentation that these are being used. We're watching it real time. Now, what would you do here, JC? Would you short this?
Up here, right there. No, I'm gonna wait for confirmation for it to go one more time above. I'll wait for confirmation one more time.
You want to
But
blow off high. That's helpful.
yep, I don't want it
You
to
want to
blow
see
up.
a blow off
Yep.
high and then a close below.
Yep, blow off high and close below, and then I would take a short.
But your conviction isn't high.
It's not high because I would use at this point I would use volume as a way to give me a secondary conviction too. And looking at that, looking from your chart, it's not giving me enough volume to say that there's enough liquidity going in there for me to want to jump into it as well. So I would want to see multiple convictions. So over here, if they close above, you can probably make sure that they don't close back below, and then you can take a position up or down depending on where they close and open. So
I guess if you look at the volume from like the open
yeah,
to right,
yeah.
there's downtrend, but then the volume just falls off. There's just maybe just not as many traders.
Well, it's also the time of day here, guys. 2:20.
Yeah, it's getting
It's usually like, don't they say 9:30 to 10:30 is the most traded
Most
time?
volume, and then 3 to 4.
technically, if you want to be really degenerate over here, you could take a call, keep stops at the 50% right here because it closed above the 90. What is it? The 98 level. I can't see it really, but once I see it, I'll tell you. So it's 6180.
98.
Closed above the 6180, right? So I would take a call because it closed, and I can keep a stop a little bit if it breaks below and confirms it. So
Because this could be a breakout finally.
yep, it could be.
And we have a higher low. Look at the context. We have a higher low. We have a higher high, higher low, and we're looking for a higher high, right? Let me just put this volume breakout. I like this indicator here. Is it going to do anything? It's going to show me anything? It's on a very high setting. Hold on, let's see here. Studies. strategy, add study, volume, breakout. Okay. Where is the... I can't adjust the data, unfortunately.
That's okay.
Let's see here. Window.
That's a lot of numbers.
Okay, here we go. This is contracts from yesterday, but I have a very cool thing that shows volume breakout. So these are all the volume breakouts. To your point, in the morning, yes, this is all where all the volume is. So this volume breakout indicator is, I'll show you what it's telling me. It's the average length, so it's 20 candles, and the volume percent breakout is 200%. So in the last 20 candles, if you get a 200% increase in volume in the last 20 candles, you get a blue dot. So that would be this candle right here. Interesting placement. Are you interested in this indicator? Look, it's pretty freaking good.
Yeah.
Look at it.
Wow.
Look at the turning point here.
Yeah, dude, that's crazy.
This is Jay-Z. Jay-Z, you were pointing this out. This is
yeah.
This is where most of the volume is.
Yeah.
That last candle.
Yeah. If you can add more conviction to whatever you guys take, it makes a huge difference. I'm not any sort of a charting person. I'm not very good at charting at all. Like I'm a flow guy through and through, right? But from what I've seen with volume, if you have confirmation of a breakout or confirmation of a breakdown with volume, you are golden, almost golden. Like I would say 95% of the time.
A huge odds enhancer because it's real time. It's non-lagging indicator, and it means that the big boys are moving. They're moving stuff, and here they're moving stuff. On this candle, they're definitely moving.
What's that called again?
Volume breakout.
Volume break.
Matt's like, I want it.
I'm gonna name my firstborn.
Volume breakout.
Volume breakout. No, just name it. You get twins, FIBS, and volume breakout.
Yeah.
Right. Fibonacci and vol. So, yeah, I think this is an important indicator to use with Fibonacci. Let's, for shits and giggles, because this is actually yesterday's 694 call. But just to demonstrate that you can absolutely use Fibonacci's on any time frame, any chart, no matter what you're looking at. It happens all day, every single freaking chart.
Yeah.
Any chart. This is a day-old chart that I picked out of my butt. And basically, yeah. So we have this clean swing. We have a retracement to the 50. Then what do we have right here? We have a sweep. We have a sweep of the low. Can you guess what
113.
number it is?
113.
113. There it is again. I'm telling you guys, this freaking happens all the time. Now, we broke out of that. Now, this is an interesting thing. What do I do? Do I leave the Fibonacci's here, or do I move them down here? That's purely speculative. It's discretionary. You can do whatever you want. Right now, it's touching the 382 pretty nicely, and there's a very interesting doji right here at the high. Now, this is an options market. This is an options chart, so this is where we don't know exactly what's going on. But point again is, okay, well, let's move this down to the full swing, and it doesn't make much difference. But the point is still there, is that this market is just about stopped at the most common fib retracement on the tool, which is either the 382 or the 618, depending on which way you snap it. Let me just do this for those that don't believe. It works both ways. So you don't have to worry about which way you're snapping it, because you can always invert it if it doesn't look right to you. But it's the same freaking thing. It's a 618 or the 382. It's a very common retracement point of any impulse move ever that you want to see, and it's in human DNA and psychology. It's completely, I can't emphasize enough how important.
It's an art too. I was just reading about it.
Yeah.
Can you pull up the silver chart again?
Which one?
The silver one you were just looking at earlier.
SLV.
Yeah, SLV with the FIBS levels and stuff. I want to see if they do the confirmation on this or not.
Oh, that one that we were just looking at.
Yeah.
This is the 1 minute chart. Let me do something here. Hold on, guys. Window, vertical, SLV. That was the 5 minute chart.
Yeah, because I just took 10% on a call.
Oh my God, you're incorrigible. It's not doing anything.
Yeah, but the premium's moving it to the point that I was able to exit for 10%, which is crazy. That's what I was looking at.
So you took it as a breakout?
Yeah, I took it as a breakout because I saw it trace back to below the level, and I was able to enter it, and I set my stops at 50% down there. But it broke out because I was looking for a quick in and out, right? So I saw it double touch. Now it's if you look at that just from your chart, it's touched 1, 2, 3, 4, 5. It's gone over 5 times, right? There has been one time that was what was it? That was 2-time confirmation on there, breaking out there. So I think the 618 level here is a huge level. So
yeah,
it needs a strong volume breakout confirmation to keep going up, right? So
yeah.
over here right now, I have my stops set at break even. So if it hits break even, I'm out, which because doesn't make me lose any money, and I will take another opportunity to re-enter because if you're playing DTEs over here, that IV and that theta are gonna eat you alive right at the same time. So I'm waiting to see what this candle does as well, and I'm waiting to see what the volume does as well on this silver, right? It's just for me to like I thought of it as a way for me to understand too. Sometimes, and I know this is hard for people to realize this too, you have to pay options tuition. That's just what it is. Market tuition is a real thing. To be able to learn the emotion and the rest after the aspect of trading and the attribution to how the trades work, you have to pay money to market. That's just what it is. You're never gonna learn
to participate.
Yeah, you're never gonna learn
It's
unless
the price
you
of admission.
feel it. Like you have to have that feeling because that's how you grow gut feelings too. By the way, like growing a gut feeling, growing a feel for something that you played before, it's all through repetition. That's just what it is. So
that's a good point. I never heard anyone describe it like that.
So I mean that's for me though. I don't know how other people do it, right? It's a personal experience aspect, right? Look at that. See if they can hold this. It's a huge it's a massive level over here.
Yeah, it's huge.
See, it closed above, barely. So are they gonna drop it over here? Or are they gonna try and push it up?
Well, this is a turning point.
Yeah.
We don't know.
It seems like it's making a higher high.
It wants to. But now,
That's
see
just
that
it.
volume though? That volume, like that's the only thing that throws me. Now, if you saw a nice big warm candle, I mean, I'm still in. I haven't gotten stopped out yet, so we'll see.
See if I can get volume percent.
It's been making a higher high since 97.40.
I can get volume percent on here. We can adjust it maybe. Let's see. No. Studies. Add study. Volume breakout.
That it's gonna give me my 20% here.
Okay, here. All right. So in the last, let's make it really. We're gonna see 50% volume breakout in the last 10 candles. We'll make it very sensitive. Bam, right there. It's a pretty good candle right there.
Yeah.
Let's try in the last 20 candles. Let's see, 100%. None. Any on this chart anywhere? Right here.
Yeah, Flash, you're right. I've lost so much money in the market. Like, it's such a it's something that I think that everyone has to go through to be able to respect and understand the market. Like, the market will humble you in all aspects and aspects of life. Like, it will. There's nobody who can come and tell me that they are the best at doing the market, because the market is always going to be the best. There's nothing. Nobody can tell me that. Curious to see if they give us a breakout here.
It's a bad time of day.
Yeah, it's just not enough like traction right now, right?
I don't know if momentum at all. Although you are getting a higher high here.
Yeah, and I'm green.
Awesome. Dig it.
Yeah, real time play right there on the FIBS for me. So.
Yeah. All right, guys. Well, it was a pleasure. I really appreciate the time that you guys took out of your day, except for you, Brad. Brad's just fucking around on the GIF.
Oh,
were you there during like 92, or was it 92 during like the British pound?
Yeah, I used to trade the Deutschmark. I used to trade currencies. Traded currencies for a bank.
Look at that. Look at that nice green candle. That's what I'm talking about.
There you go. Liftoff.
That's what I'm talking about.
My aunt's like brother-in-law used to work at Solomon Brothers back in the day. He's retired now, but
that was this crazy guy,
like,
Fibro Solomon.
Apparently this guy is like super smart. Now he has his own
geniuses.
He has his own podcast now too, and he interviews people, and unbelievable.
Famous trader from Fibro Solomon. Back in the 80s. No. The hell was his name? Myron Scholes.
Myron Scholes.
Black Scholes. Yeah. Trading the options pricing. Black and Scholes. Yeah.
Yeah, Black Scholes equation.
Yeah.
All right,
I'll think of his name.
You're done, right? I'm gonna go ahead and stop the recording so I can get this uploaded later on.
Oh, please, yeah.
Yeah.
I could be out of here.
No. Definitely. I'm just gonna stop the recording. That way, it's not gonna take me forever to edit.